Great day to have on Kevin Hassett. He's the director of the National Economic Council. Good morning, Mr. Director.
Joe. Good to be here.
Tell you where I want to start. Earlier we had a discussion, Kevin, about all the new highs last week and the V-shaped bottom put in on this latest conflict. When it started, we noted that in previous conflicts like this, geopolitical conflicts, it usually is very short-lived and usually a pretty good buying opportunity. But again, history never repeats. It always rhymes. And for some reason, because of the issue of the Strait, because of oil prices and what could happen with inflation and what that would do to the Fed, we thought, no, it's not going to happen. But darned if it didn't happen again to new highs in the face of all this uncertainty. What do you attribute that to?
Right. Well, I think that what's been happening more than anything else is that President Trump has been communicating with the American people on what the current state of things is. And he's been talking about how negotiations are moving forward well. He truthed over the weekend that their talks are resuming. Now, there are a lot of people chattering in Iran that aren't necessarily in power who are trying to perhaps undermine their own colleagues. But the fact is that the President Trump's truths, you go back, look one after another, have given a very clear guide to the journalists in the country and American people about the progress that we're making. At the beginning, the president said in 4 to 6 weeks, we expect this could be resolved, and I think we're getting pretty close to that being accurate.
So if you remove the overhang, or at least keep people updated, my point was that there must be some underlying fundamentals that you would point to.
Sure.
That were, whether it's corporate profits, whether it's margins. I mean, I'm amazed at how well behaved the bond market has been, the 10-year staying right around in a range, in spite of a lot of different concerns about debt and inflation and everything else.
Well, as you know, that we've had 2 earnings seasons in a row where basically everything's surprising on the upside. That's happening because the golden age that President Trump promised is starting to be very visible in the profit data, but also more importantly in the wage data. If you're a person who has a job where you're making tips, or you're making overtime, or you're a retiree who thought that Social Security wasn't what you expected, you need to make some more money, all of you got huge tax breaks in the $4,000 to $7,000 range because of the big, beautiful bill. And so I think that with strong domestic economy, then the question is there something about the foreign relations that could upset that? And first, the U.S. economy is the engine of global growth. And so a strong U.S. economy is a super positive, despite what's going on in the Gulf. But also, once this is resolved, think about how much energy production in the Gulf area has been depressed over time because of the huge risk premium associated with Iranian misbehavior. And so once this thing is done, think about the explosion in new energy production that can happen in the Middle East, driving prices way, way down over time, including in the U.S. The final thing I can say is that if you look at the ship traffic data, it's kind of like every empty vessel on Earth is headed towards the U.S. to fill up with oil right now. So the U.S. is the biggest oil producer on Earth, and the capacity that we have to meet the demand of people who are stuck in that picture that you're showing, I think is a positive surprise for markets.
You know, Kevin, notwithstanding whether you're in support of the war or not, and think that it's worthwhile and that we can, some near-term pain in terms of inflation and affordability, maybe it's worth it in the long run for all the objectives that obviously that we've outlined for why we went in to Iran in the first place. But in terms of inflation, there's a reason we give a headline number and there's a reason that we give a core number, because food and energy are notoriously volatile on a monthly basis, and they can give people the opportunity to say inflation tripled. Inflation tripled because it was from 0.3 to 0.9. So, everybody's got a way of talking their whatever their own book is. But 3.3 is definitely above what the Fed wants. That was the last number. Even if you use the core was 2.6, obviously. That's still too high. So the president had, when he did this, he knew affordability was on everyone's minds and midterms are coming up. This is a tough sell at this point when everybody's talking about affordability, especially if you don't think that it was an imminent threat, which we're hearing now from certain people.
Well, I could give the other side of it, Joe. I don't think it's a tough sell to say that we just had a 0.2 at core, which rounded up to 0.2 from the ones. 2.6 is the lowest that core inflation has been since before Biden inflation started. And so we've made a huge amount of progress. And then you remember core excludes food and energy. But one of the things that was the best news of the CPI report is all the work that we've done to reduce the price of food. And so when I came in, the only thing everybody was talking about was the high price of eggs. Now egg prices are so low that farmers are actually complaining about it. Beef prices came down enormously because we opened up imports to beef. And so on. Even drug prices have come down because of Trump RX. And so we've made a huge amount of progress on the individual items that affect inflation. And then we're also, of course, addressing the macroeconomic issue of how you get inflation down. And that's by being a supply side. So you got increased supply that puts downward pressure on inflation, and cutting government spending, which went down by about the deficit by $400 billion last year.
I guess it's possible that it takes a while, even if things do resolve in the Middle East. There are some people that think that oil could be permanently, well, not permanently, but at least higher for an extended period, or at least well above where it was. We had a 5 handle, didn't we? A print at one point below 60. So you think 80 is the new normal, and that's going to make it. No, you don't.
No, I don't. I think that if you go ahead, and again, the exact timing month to month is something that the futures markets are making guesses about. But if you look ahead, then the price of oil has got to, at the end of this, go down. And it's got to go down because of all the production in the U.S. that we're doing because of our energy dominance strategy, and all the production that's going to come online in the Middle East once the straits are open and that risk premium is gone. And think about this in terms of how long it's going to take to recover. The Saudis still have about 2 million barrels a day of excess capacity. They can turn the knobs and increase that production and put it in boats and ship it around the global economy. As soon as the strait is open, they could get going on that. And so my view is that I think that there's been energy production that's been suppressed by the Iranian behavior in the Middle East, and that when that takes off, the long-run oil price is going to go down, down, down. Now, if you're a person who's an oil producer right now and you're expecting lower prices, say, a year from now or 2 years from now, then you should turn the spigot up as much as you can right now, because you're going to get higher prices now than you will a year or two from now. And I think that that's one of the offsetting factors that we're seeing right now. People are eager to get in and sell their stuff at this temporarily high price.
Hey, Kevin, curious your reaction to this story in the Wall Street Journal about the UAE contacting Scott Bessent about potentially the United States providing some kind of currency swap or bailout or line of credit or rescue, I don't know what, if the strait remains closed and it continues to injure their economy. What do you make of that, and what do you know about that?
Right. Well, I haven't talked directly with Secretary Bessent about this, but as you know, the UAE has been an incredibly valuable ally throughout this effort, and I'm sure the Treasury Secretary will make every effort to help them out should that be necessary. But right now, the President Trump has said he thinks that the talks are moving forward very positively. He said that the talks will continue and even into this evening in his truth over the weekend. And so I think that it probably won't be necessary. But again, these are very close allies. And Secretary Bessent has shown a nimbleness and a cleverness about helping our allies when they're in time of need.
Argentina, that finally worked out, right?
Oh, sure. The U.S. made money. Yeah, that's right. The U.S. made money.
What's going to happen with, how does this finally work with war? Be glad it's not you, because Tom Tillis would be not, if it was the other Kevin, you wouldn't be having a hearing either. How does it finally work out, do you think?
Well, first of all, I'm really thrilled that my old friend Kevin Warsh is the nominee. I'm very happy to be here. And I can tell you that he's an incredibly strong nominee. He worked at the National Economic Council when he was a kid. He went to the Fed and was the youngest governor. He was there during the financial crisis. He's got impeccable credentials. And so Congress should, or the Senate should, confirm him as soon as possible. My expectation is that after everybody sees him in his hearing and sees how deft on his feet he is, how knowledgeable about the Fed he is, and how good his ideas are about returning the Fed towards a place where it's nonpartisan, that it's going to be hard to resist voting yes.
Right, but how do we get there with the, I don't know whether you call it a roadblock, but we're kind of, both sides are talking at each other. The president hears that Tom Tillis isn't going to do it, and then he doubles down on the subpoenas, and Jeanine Pirro sends people over to the construction site. I mean, how's this finally going to work out? Jay Powell's going to stay on the Fed till 2100, till the year 21. It just seems like there's a lot of talking at each other at this point, and it's Warsh is the one who's caught in the middle of it.
Well, I don't think he's caught in the middle. I think he is in the middle, and that's where he wants to be. And the bottom line is, I think after the hearing, people will see what a strong candidate he is. And don't forget that in the end, Kevin Warsh is going to be the Fed chair. And when he's Fed chair, then everybody who wants to find out about all the cost overruns and everything else that have been going on over the last couple of years will, of course, be able to do so because we've got a Fed chair there who people trust.
Can you tell us anything about? You're right outside the Oval Office, obviously. What's going to happen in the next 24, 48 hours in terms of the peace talks? Are they going to happen?
I can't get ahead of that. The president has said that they're going to happen, and I believe the president hasn't corrected that, and so that's my current state of information. And
you don't know how many different factions we're listening to in Iran. There's at least 2 or 3, I think.
And I haven't counted. I'm sorry, I'm not a Iran negotiation guy.
If you figure that out, let us know. Kevin Hassett,
okay,
thanks.
We'll do that.
All right,
thanks, Joe.
See you later.